Broadcom, the #2 player in powering AI after Nvidia in terms of chips, just had a bit of a stumble.
We're going to take a look at that, and we're going to take a look at Nvidia. We're going to take a look at AMD to understand this ecosystem and tell us why you might want to look at newenergyboom.com.
Also, we take a 3-minute drill on another company that's in the AI chip ecosystem, AMD, and give you our take today on Altimetry Authority.
Let's talk earnings and favorite pastimes.
So let me just say, earnings
liquidity
were
of Wall Street.
That's
Why do they
2.5x
because their compensation goes up.
Wall Street's wrong again. After a rip-roaring time for the beginning of the year where Broadcom could do no wrong, at the end of the year, people have gotten a little pessimistic about the company in terms of what's possibly going on for its guidance for 2026 and so on. Joel, let's give everybody a lay of the land on if this is a reason to have cause for concern over Broadcom or if it's just a hiccup for the business.
I mean, from $180 a share to $360 a share, right? You'd say, why would a company that is so bad, meaning 2, 3, 4, 5% returns under GAAP accounting, possibly justify a $1.9 trillion market cap? You don't hear about Broadcom as often as you hear about the other big guys, but $1.9 trillion, $406 a share. And we're looking at a uniform accounting number that says, here's why. Because in reality, this company is a 70+% return on assets, and consistently so. This company is a moneymaker. The R&D that it spends, the way it handles leases, the stock options, all kinds of other issues truly make this company, right, look awful under GAAP accounting, but under uniform accounting, you see the truth. In reality, this is what the biggest investors in the world see, and that's why the stock is as valuable as it is. Now, here's the issue. Wall Street analysts say this company is going to crush it and literally double the 70% returns. U.S. corporate average is 12%. Global corporate average is 6%. Right, and they're saying this company is going to get up to a 200+% return on assets. That's Wall Street's pro forma forecast of the biggest 20-30 banks. We take the sell-side research analyst numbers, we convert them into uniform accounting, and it says, here's what Wall Street is basically planning for this company's business. Now, to get to the market cap of $2 trillion, you need to have that kind of thing continue, right, and continue in spades. So this is the Nvidia that no one's talking about. This is the Google that no one's talking about, right? This is, I don't recall Broadcom being named in the Magnificent Seven, but holy moly, at a $1.9 trillion market cap with these kinds of return on assets, there might be room to shove them in there.
Yeah, let's be real. Tesla shouldn't be in there, but maybe Broadcom should be. And everybody, that's why this whole entire headline and narrative that came out in terms of Broadcom is following Oracle and letting down AI-focused investors was such a joke. Look, this company, it's basically just back to where it was in early November. This is a company that has had massive upside and is massively growing, and in bet expectations for the company are still really high. People are betting on this. And part of the reason why is because you may have remembered from a few episodes ago when we talked about TPUs, which are Alphabet's tensor processing units, which are coming to basically attack NVIDIA and disrupt NVIDIA. Well, when we talk about Alphabet's TPUs, we're really talking about Broadcom's TPUs, because Broadcom is actually who designs them and helps lay them out for Alphabet. Of course, Taiwan Semiconductor makes the chips because Taiwan Semiconductor makes everybody's chips. But Broadcom is actually part of that Alphabet ecosystem. They're the ones who design the chips. They benefit when more TPUs are sold. And look, we all know there is going to be a lot more TPUs and GPUs and every single kind of processing unit that you're going to use for AI training and for AI inference and everything else coming, because we can see how there's an explosion of data center build, right? This is just for 2025 that we're talking about basically more than doubling the speed at which data centers are being built. And that's going to keep on going for 26 and beyond. And look, when you look at the investment that we're seeing from hyperscalers, it's not slowing down. Hyperscalers are going to continue to invest at over $300 billion a year in terms of their data center and their AI innovation. This is uniform accounting numbers that we have showing this that just show how strong this is. Growth investment, by the way. This isn't, I used to have an NVIDIA chip and I'm replacing it with a new NVIDIA chip. This is, I've already replaced all the NVIDIA chips, done all the cost to do that, and now I'm going to buy more NVIDIA chips or more Broadcom, Alphabet, TPUs. and whatnot in terms of that. So you look at that, there's a massive amount of growth investment going into these businesses that isn't going to slow down. That's why when you look at Broadcom, it actually kind of makes sense that you're seeing this in terms of the valuation. But what was really interesting for us is when we looked at this, Broadcom, and Joel, you made the perfect analogy in terms of talking about Nvidia. It looks, when we look at embedded expectations, this is embedded expectations for Broadcom, right? That idea of white bar is what the market's pricing in, light blue bar is what analysts are forecasting, blue bar is what the history is. This is Nvidia. They're both basically forecast for, Broadcom is basically forecast to be a year or two behind Nvidia in terms of the inflection, but basically seeing the same profitability. And so we look at these two and we go, yeah, in an AI ecosystem build out, it makes sense that both of these are benefiting from this because they're both about to see a surge in continued spend because you're going to buy more GPUs and more TPUs. The really interesting thing to us though is if that's all happening, remember what we talked about. Alphabet is stacking a $900 billion opportunity that they and Broadcom are sharing for this. If that's really happening, the company is not priced for this potential benefit is Alphabet that could benefit from this as well. And so we just thought that was a really interesting thing to highlight for you all, just to realize when you talk Broadcom, you're really talking TPUs and Alphabet, because that's a big part of what they're making right now. I'm sure Broadcom makes a bunch of telecom chips and everything else, but it's really the TPU right now is the big story for them. And here's the thing, along with thinking that Alphabet is interesting, if you think that this massive build out that we're seeing for data centers is going to continue, which we all know it's going to, the data shows it will, check out a special new report that we put together that talks about other big winners from this huge investment build out. It's called newenergyboom.com. New special report that we produced. It gives you some other big winners as we see this investment cycle happen that you should check out. And with that, Joel, also, we did have a 3-minute drill request for somebody that we thought was perfect everyone to throw into this. Go ahead, Joel. What are you say? Yeah, exactly.
Viewer request, subscriber request. Yeah.
Right. A subscriber request, a company that we thought fit perfectly into this story because a company that really, when you talk about it for a 3-minute drill, fits exactly into this narrative. It's, if you will, the other third head, if you want to be generous, to the three-headed monster for what's going on in terms of building out GPUs and everything else. And by the way, Joel, a company that you and I have a bit of experience with in terms of AMD. Joel, why don't you give everybody a context about what our background is for AMD, and then let's jump into the charts and what's going on.
So we're not in the business of giving away too many of our best free ideas, but back in 2015, we got a call and they said, what do you think about AMD? The stock was at $2 a share, $2.20. And we said to Robin Blumenthal, who's a fantastic writer and editor and has done a number of great books as well as articles. And we said, we think AMD is not about to go into bankruptcy. We think it has a very good track record of cash flows. We think the market is missing it completely, and the stock has a lot of upside. That was at $2 a share. That was at $2 a share many, many years ago. Now we'll give the stock at $200 a share, right? $200 a share from that point. That's, by the way, that's the only time Robin and I have been in Barron's. We both got quoted for Barron's that time. It's the only time we ever been in Barron's. Anyway, here's what we're seeing today. So Advanced Micro Devices looks like, oh my goodness, it's back to being a horrible company again, right? Let's sell the stock because the GAAP accounting return on assets is back to like near zero, which is kind of what it looked like back then. When in reality, which is the kind of same thing we said back in 2015, the company's uniform numbers are far healthier. There's all kinds of required non-cash numbers showing up in their expenses that don't have anything to do with the cash flows of the company. And when you have these earnings, they really don't. And when you have these earnings, uniform earnings, you see, well, this is a pretty good company. Maybe not as high return as Nvidia, maybe not as high return as Broadcom, but still very respectable returns that are more than double the U.S. corporate average, which is 12, and more than quadruple the global corporate average, which is only 6. So AMD is a very profitable company, unlike GAAP accounting would suggest. Right? Its returns, Wall Street analysts believes, are going up because why shouldn't they, given that they are getting their chips into the AI ecosystem and they are needed. And just the whole build out of industrialization of America requires a lot more computing power, not just AI, but computing power in general. And the stock market at $360 billion market cap is saying, yeah, all right, you're going to get back to like a 30%, 35% return, and it will hold at that level in perpetuity. That means AMD is priced for a much, much, much lower level of economic profit than the other peers like Nvidia or Broadcom in this space. Rob, what do you think about that? Because that's the line. The line is to get to the current price, to get to the current $221 a share, right? $220 a share, get to levels that you were, slightly higher than peak in 2021, 22, and hold forever.
Yeah, and I mean, if you look at everybody, look, there's a reason why they're not expected to get as high as Broadcom, which I really wish that they would just change that ticker from AVGO, what it used to be Avago, and acquire Broadcom. Just change it back to Broadcom. It makes everybody's life easier. But anyways, why it's lower return on asset forecast than Broadcom or than Nvidia. Nvidia has a competitive moat in CUDA. Right, CUDA actually makes you locked in on Nvidia, so once you're there, you're there. And Broadcom has a competitive moat because it's inside of Google's data centers, and TPUs is the only other thing that has an ecosystem built around it. But AMD, the idea that they're not going to have some level of profitability boost, which is what the market is pricing in here, that level of profitability boost, they're going to definitely have it because we're going to need all the GPUs that we need, to your point, Joel, to be able to expand, not just in terms of what we're doing for AI, but also for overall reindustrialization of the United States and everything else that's going on. So yeah, I agree with you, Joel. To us, this makes sense. This is one that we'd say, hey, look, it is likely that Nvidia could produce this kind of high profitability for a while in terms of growth, and maybe even might see some upside. So this is one that we think is actually, we're not pounding the table on it. It's not one of our recommendations. It's not a name that we're saying go and buy it tomorrow, but we are certainly saying this is not one that the valuations make 0 sense on. And with that also, as we mentioned, Nvidia, Broadcom, AMD, all these are benefiting from this massive investment cycle we have going on. Just want to highlight this one more time. If you want to hear some other stocks that we are pounding the table on for this investment cycle, check out newenergyboom.com. And if you have a company you want us to look at, like AMD, or maybe you disagree with us on our Broadcom take relative to Nvidia and everything else, drop it in the comments and hit the like and subscribe button, because that is this episode of Altimetry Authority. Thanks, everybody.